Reaction to the Fed meetings with Mark Zandi, chief economist at Moody's Analytics. Mark, you've heard what Steve summarized as the Fed's meeting minutes. How close is the Fed to its goal on inflation?
I think it's well on its way, Tyler. I think, in fact, the most recent inflation data say they're there. I mean, if you look at the 3-month annualized growth in core consumer price inflation or core consumer expenditure deflator, the measure they target, we're there. We're 2.5%. So that's very consistent with their target. And that probably overstates the case, but it makes a strong case that we're definitively moving in the right direction here. And I think policy is sufficiently tight. I don't think they need another rate hike to get what they want, and that's inflation back to their target in a reasonably timely way, say by this time next year.
So when you say it's not definitive, I guess what you're saying is you'd like to see more months of data that show exactly that kind of measure, or maybe even a little lower. Am I understanding correctly?
Yeah, that's right. I mean, obviously the data is affected by lots of technical measurement issues, and we're going to get a sense of that, I think tomorrow morning when we get the CPI for the month of September. It's going to show probably a bit of an increase, and that will be the flip side of some of the beneficial technicals we were getting earlier now being a little bit less beneficial. So, yeah, my sense is inflation isn't quite back to where they want it to go, but it's going in the right direction. And here's the other thing, I forecast lots of stuff. Some things I'm confident in, some not so much. Forecasting inflation getting back to target over the next year, I feel confident in, and a significant part of that goes to the growth in the cost of housing services, which is a big chunk of inflation, and we know that that's going to continue to moderate and get inflation back in. So I feel very confident that inflation will be back to their target by this time next year, but we need more evidence of that.
Steve,
for sure.
I am confident in predicting that the Giants will not beat the Bills this weekend, but that's about all I'm confident in. How do you read what the Fed has said here? And as you say, there seems to be a balancing act going on between those who would like to stay where rates are, those who might see one more hike.
Tyler, the minutes come out 3 weeks after the meeting every time, but sometimes they're colder than others. And I'm going to say these minutes are a bit colder than other minutes. And the reason is because an awful lot of stuff has gone down since these minutes came out. You've had this rather pronounced surge in Treasury yields that Fed officials have talked about and have said affects their outlook on policy. Obviously, the Hamas terrorist attacks in Israel have had a global impact economically as well as psychologically as well. So those two factors have had tremendous impacts on markets, tremendous impacts on the markets that make a difference for the Federal Reserve. And then you've had these comments come out, guys like Waller today saying, I think the Fed can wait and see. So I don't, they may have this other forecast. And just one other, I think, important context. These minutes came out, they were very hawkish, and the market reacted. When the statement came out and the projections came out back in September, I feel these minutes are a little bit more dovish, or suggest even the conversation at the time was not as hawkish as was portrayed in either the projections or in the statement or the press conference by the chair. It's just a much more two-sided debate. It still leans toward that one more hike. I think that hike is there. I don't think there's a lot of folks on the committee that, from what I'm hearing right now, want to push the button on that hike.